Hey friends, this is Altcoin Insider. Today's video might be one of the most important in this entire cycle, and I'm not exaggerating. Right now, as you're watching this, the future of crypto in the United States is being redrawn by one single thing, the Clarity Act. If this law goes the way the market expects, it won't just be good news. It could decide which coins get left behind, and which ones finally break out into a new phase of adoption. And two of the biggest potential winners on my radar are HBAR and XRP. In this video, I'm going to walk you through exactly what this law is really changing, why Trump's administration is pushing so hard on a March deadline, and what that means for HBAR and XRP in the next days, weeks, and for the rest of this cycle. We'll talk levels, scenarios, and I'll give you my personal game plan where I see realistic targets and where I'd be extremely careful. So if you hold HBAR, XRP, or you're just trying to understand which altcoins can actually benefit from real regulation instead of die from it, watch this to the end. Don't just skip around. Let's get into it. First, what exactly is this Clarity Act? In simple terms, it's a framework law designed to put digital assets into clear, formal categories instead of relying on vague court interpretations. Stablecoins are expected to fall under CFTC-style oversight with explicit rules on reserves, audits, and yield products. Decentralized tokens like Bitcoin and Ethereum are recognized as pure commodities, which means they can be traded, custody held, and used in financial products without every transaction being treated like a securities offering. Centralized platforms, exchanges, custodians, and some CeFi players get a rulebook for listings, delistings, disclosures, and customer protection instead of random enforcement actions after the fact. In other words, no more "we'll sue first and explain later." The Trump administration is heavily pressuring Congress and regulators to finalize the text and key positions by around March honest, because without that, things stay messy. ETF products keep running into legal uncertainty, banks hesitate to touch DeFi, and the US risks losing ground to Europe and Asia. Ripple CEO Brad Garlinghouse recently said he sees a 90% chance of getting this clarity by April. And prediction markets like Polymarket are pricing more than 80% odds of passage in some form. If the act passes or even clearly moves forward, the market gets a psychological and regulatory relief moment. Capital that has been sitting on the sidelines for years finally has a path to enter. If it's delayed or watered down, we likely see a spike in volatility and a pullback across majors. But it does not kill the long-term thesis, because the political momentum in the US has clearly flipped to pro-crypto. Now let's switch to HBAR. Hedera is not just another chain with a couple of DeFi apps, it's an enterprise-grade network built around a governing council of heavyweight corporations names like Google, IBM, Boeing, and global financial and telecom players. These companies are already used to working in a regulated environment. For them, regulatory clarity in the US is not some abstract concept. It's a checklist item before they can scale serious tokenization, data, and settlement use cases. The Clarity framework removes a big piece of uncertainty around whether using HBAR in these systems could later be attacked as an unregistered securities issue. Think about what Hedera is actually optimized for: high throughput, finality in seconds, and extremely low and predictable fees. That's exactly what enterprises want for use cases like supply chain tracking, carbon credits, tokenized invoices, loyalty systems, and even regulated financial instruments. There are real examples already: ESG reporting networks using Hedera to store immutable environmental data, governments testing land registries and public records on Hedera, and payment and loyalty platforms settling points and rewards through the network. Right now, a lot of this sits in pilot or limited production mode, but with regulatory clarity, the argument inside these big companies shifts from "can we legally do this?" to "how fast can we scale this globally?" From a market perspective, HBAR has been building a solid base. Support around $0.12 has been tested multiple times, and the market has been absorbing sell pressure from earlier investors. Indicators like RSI sitting in the mid-range show we're not overheated, and structurally the chart looks like a preparation phase rather than a blow-off top. If we get constructive headlines around clarity, a move through 0.15 with follow-through into the 0.18-0.2 zone in the coming weeks is absolutely realistic, especially if total value locked on Hedera continues to grow and new institutional integrations are announced. In a more extended time frame, if Web3 enterprise adoption keeps trending up and Hedera continues to position itself as a neutral, governance-driven infrastructure, targets in the $0.35 to $0.5 region for this cycle are not crazy, although of course any major Bitcoin dump can temporarily knock it back toward previous support. For active traders, HBAR remains more of a fundamental swing asset than a pure meme trade. Entries near strong support with clearly defined stops below the range make sense if you believe in the clarity narrative and in long-term enterprise use cases. The main risk is not that Hedera fails. Technically, it's that the macro environment or Bitcoin dominance suppresses altcoin performance even while fundamentals improve. That's why position sizing and risk management matter more here than trying to pick the exact bottom. Now let's move to XRP, the king of cross-border payments, and perhaps the clearest direct beneficiary of a US clarity moment. Ripple already fought and won key phases of its legal battle with the SEC, with a judge recognizing that secondary market sales of XRP are not inherently securities transactions. However, despite that court victory, there has still been an overhang. Some U.S. institutions remain cautious because the broader regulatory regime around digital assets has stayed fragmented. Clarity Act is precisely the kind of framework that can convert that court win into a full-blown green zone for banks and payment providers using XRP. If XRP is explicitly treated as a digital commodity on spot markets, while giving regulated rails for institutions to custody and settle with it, then Ripple can scale its on-demand liquidity corridors much more aggressively. Their RLUSD stablecoin is already in testnet, and Ripple reports hundreds of financial institutions either partnered or in serious discussion. In a world where cross-border payments are still slow, expensive, and fragmented, a compliant, liquid, fast asset that reduces friction is extremely attractive to banks, remittance providers, and fintechs. Technically, XRP has been behaving like an asset coiled for a bigger move. The $1.2, $1.3 area has acted as a demand zone, with buyers stepping in on dips and daily moving averages gradually curling upward. Volume has been creeping higher on green days, and momentum indicators have been flashing early signs of a potential breakout if a catalyst arrives. If clarity headlines come in on the positive side, a spike into the 1.62 range in the near term is a reasonable scenario, especially if Bitcoin holds up and overall risk sentiment remains positive. Over a longer horizon, if we see an XRP ETF proposal move forward and real-world settlement volumes continue to climb, targets of $4 to $6 during this broader cycle are within the realm of possibility, although of course not guaranteed. Why might XRP outperform HBAR in the short term? One simple reason: narrative and visibility. Ripple and its executives are constantly present in policy discussions, interviews, and hearings. XRP has deep liquidity and is already integrated at scale in many exchanges and trading platforms. HBAR, on the other hand, flies more under the radar, appealing to a more niche enterprise tech crowd. That doesn't make one better than the other. It just means XRP may react more violently to headlines and flows, while HBAR may grind higher more quietly as enterprise adoption data accumulates. So what should we expect around early March as all of this plays out? Markets are extremely headline-driven right now. Every leak about negotiations in Washington, every committee comment, every sources say headline can trigger intraday spikes on both BTC and majors like XRP and HBAR. A clearly positive signal, like a strong, unified statement from the administration and key lawmakers that clarity is moving forward with broad support, could trigger a wave of repricing where traders rush to front-run what they see as a multi-quarter institutional inflow story. In that scenario, HBAR pushing into the mid-teens of a $1 range and XRP retesting and breaking recent highs is almost a base case, not a moonshot. On the flip side, if we get confusion, last-minute amendments, or a focus on restricting stablecoin yields too aggressively, markets could interpret that as same old Washington and sell off in disappointment. That doesn't necessarily invalidate the entire bull thesis, but it stretches the timeline and shakes out over-leveraged positions. Volatility would go up, funding rates reset, and we could get a classic fake-out then breakout type of structure where the first reaction is down before the longer-term trend reasserts itself once clearer details emerge. Let's zoom out for a moment and look at the global context beyond the US. While America is wrestling with clarity, other regions are not standing still. The European Union has already moved ahead with MiCA, putting in place comprehensive rules for stablecoin issuers, service providers, and certain types of tokens. In Asia, regulators in places like Hong Kong and Singapore are running pilots around tokenized securities, RWA, and regulated exchanges. Brazil and other Latin American countries are experimenting with tokenized government bonds and digital infrastructure for their financial systems. All of this creates a competitive environment. If the US drags its feet, capital and innovation simply flow to more welcoming jurisdictions. In that global race, Hedera and XRP are positioned in interesting, complementary ways. Hedera, with its corporate counsel and focus on compliance-friendly architecture, fits naturally into enterprise and government projects that need predictable governance and performance. XRP, with its payments focus and existing relationships with banks and fintech companies, fits into corridors that link regions, for example, Asia to Latin America or Europe to emerging markets. When the US finally locks in a clear framework, it doesn't just affect domestic projects. It sends a signal to the rest of the world that the largest capital market is ready to play at scale. So, with all of that in mind, let's talk forecasts in a structured way. For HBAR, in the near term, meaning the coming days and weeks, the key zone to watch is still that 0.11, $0.12 support and the 0.15 resistance area. A constructive clarity narrative and a stable Bitcoin can support a move into the 0.180.2 range, which would essentially mark a breakout from the current consolidation. On a 1-month view, if we see tangible growth in TVL on Hedera, more enterprise announcements, or fresh integrations in ESG, identity, or tokenization platforms, then 0.22, 0.25 becomes a plausible next step. On a full cycle view for 2026, assuming no catastrophic macro shock, a trajectory toward 0.3, 0.5 on the back of enterprise Web3 adoption is a realistic bullish scenario, with the obvious caveat that any deep Bitcoin correction can temporarily drag it back toward previous base levels. For XRP, the volatility will likely be higher. In the very short term, the 1st to the 7th of March window, a positive clarity signal could push XRP into the 1.6-1.8 range as traders try to price in the new regulatory environment. For the month of March, with sustained positive news, test of the 22.5 zone is on the table, especially if volumes and Ripple's payment corridors pick up and speculation around an eventual XRP ETF intensifies. Looking out to the end of 2026, in a scenario where we have a functioning clarity framework, at least one major ETF or structured product tied to XRP, and continued growth in institutional payment flows, targets in the $4-6 area line up with what many analysts and AI-driven models have been projecting. As for the broader market, Bitcoin remains the gravity center. Many analysts see a path toward $100 and above if regulatory clarity aligns with macro liquidity and ETF inflows remain strong. In that kind of environment, quality altcoins with real use cases, and both HBAR and XRP fit that description, can reasonably aim for 2-3x from current levels over the cycle, with all the usual volatility and shakeouts along the way. To wrap this up, Clarity Act is not just a short-term trading event or another piece of political noise. It represents a structural shift in how the U.S., still the most important financial jurisdiction in the world, treats digital assets. If it lands anywhere close to current expectations, it will unlock new avenues for institutional money, accelerate tokenization of real-world assets, and give both builders and investors a rulebook instead of a minefield. In that world, Hedera has a real shot at becoming one of the key enterprise backbones of Web3, and XRP has a shot at becoming a mainstream settlement asset for cross-border flows. So my message is simple. Don't chase every wick, but don't sleep on this either. Hold your core positions if you believe in the long-term story, add on reasonable dips, and always use stop losses and risk management that match your own psychology and time frame. For my channel, this is a top-tier narrative. We'll be breaking down the charts, the headlines, and the on-chain data as it comes in. Drop in the comments which side you're more bullish on right now, HBAR or XRP, and why. Make sure you're subscribed, hit the like button, and I'll see you in the next one. Trade safe, friends.